Good evening, TheoTrade. This is Corey Rosenblumen. You're watching the Theo Nightly video for the 2nd of January, 2020. Welcome to the new year, TheoTrade. Well, the bulls took control of today after a slightly weak open. And before we go any further, we're talking about sector money flow, which sectors are strong today, and what does that mean for the broader market. We'll also take a look at a quick overview of how the year started in other commodities, including gold, treasuries, and bonds, of course. Well, we'll take a look at this first. So at the top, we have our offensive names. That means money's flowing into the market if there is optimism or general bullishness about the economy or in general. The top three include financials. We always take a look at that together. K, which is technology. That's your Nasdaq and other big names. And Y is discretionary. If you're seeing these areas show strength or money flow, for example, XLF was up 1% today. The technology was up about 1.6%, and Y discretionary just over 1%. Those are the strongest sectors of the day, except for industrials. So these are the bullish buckets, or the bullish areas of the market, with a little bit of industrials thrown in the mix. The little areas here are the middle sectors, which is industrials, materials, and energy. Did a good session today. And at the bottom, they are the defensive names. If the economy is going to do well, but money flows in the stock market, it's probably not going to flow into these three, which are defensive names such as Staples, XLP, and Utilities, XLU. That's treated sometimes like a bond. All right, that being said, we're seeing the money flow bullish. All three are the strongest, and let's take that and translate it to the broader perspective. We are still, and this is 2019, higher highs, higher lows, rising moving averages, bullish volume on the daily chart and here on the hourly. So we'll take a look at the weekly expected move. Friday is tomorrow. Might feel like a Monday after the new year, but it is Friday. And we'll take a look at other perspectives from that vantage point. But higher high, and that takes us to all-time highs in the S&P. The last couple of sessions were a pullback, not too dissimilar to the earlier start of December. And so the end of December had a tiny 2-day pullback, and it's off to the races once again for the bull market continuing. So that is the S&P 500. Now we can expand the graph to look at the Nasdaq. That showed relative strength today. In fact, the strongest market was the Nasdaq. And that took us upward toward 8,900, which if you scroll in a little bit here, it's not that far from 9,000 in the Nasdaq futures. Beyond that, the Dow mini futures are trading upward toward 29,000. And it's only 1,200 points away. These are simple reference numbers, round numbers on the bigger picture. And the one underperforming segment of the market was the Russell. And that was down, well, not quite down, it was flat. Flat on today's session. It was down most of the day until the end. On the other hand, look at the VIX. VIX is tumbling away from 15, and it's back in the 12.5 handle level. Maybe a little bit more to go, the 12 handle for the VIX volatility futures. Otherwise, we have bonds, which bounced up a little bit in today's session. We still have this large triangle and support shelf near the 155, 155.50, and roughly 156 on the ZB 30-year note, or 30-year bond. This is the 10-year note, which is ZN. Still have this buy potential signal off of weekly and daily support, but it's still in a triangle. And gold, even though it had a breakout, still remains in a larger trading range. So gold had a decent session today, but it has bounced off the 1450 target and gave a buy signal breakout above 1480. And that's extended it toward 1500 and even above where we were looking for, which is about 1550. So gold remains on a breakout with relatively or expanding volume. Crude oil has resistance into 62, 61 per barrel. So we think this is going to trade to the downside, but we're always careful to watch what actually happens. We don't get caught up in ego get caught up in movement toward and away from key levels. And for crude, that is the departure, or the trade setup is to trade the departure from 61.62 overhead resistance, given that we spiked up in September. So that's a play to the downside if we see additional bearish activity or sell side activity. Let's let the market break under this rising trend line, which takes us roughly here at 60 and 50 cents per barrel. That's the bigger picture concepts. In today's session, I like to keep track on trending stocks. I may even trade some trending stocks intraday, trade in the direction of the trend. But the bigger concept today, GE was one of our candidate stocks we talked about in the chat most of today. So GE had its own range expansion, triangle breakout to continue this uptrend in motion. Behind it was Occidental, we're just looking at daily charts, rallying off the support lows at a roughly 37 per share. I think the main thing to talk about in today's session was Amazon, which got all the way back to 1900, actually a little bit shy of 1900. Nevertheless, it did pivot away from this round number, retrace with the market, those two tiny bearish sessions, and today was a gap and go outcome. Otherwise, we have FedEx in a rally off of 150 per share, and Lockheed Martin continuing the bull flag and just near all-time highs. A few more. Disney has a bull flag buy. That's a recommended bounce potential play off of 144. That's achieving midway target tactics. PayPal, we'll just go to the list here. And Boeing, finally, Boeing helped boost the Dow Jones today. And that is a buy opportunity off of 320 and 325, just to name a few bullishly trending stocks. So as we go into Friday and into the weekend, continue looking at stocks that are making new highs. We can pull some of those in with a scan. These are the stocks making higher highs of the last 252 days, which is a trading year back to January of 2019. And I like to segment these two ways. Number one, by sector, there's industrials, discretionary, healthcare, financials, information technology, that includes Apple, strangely enough, and consumer services. You can also segment these names. They're stocks joining the S&P and the Nasdaq and other indices at new highs by their market cap. That may be an easier way to find candidates. These would include Apple, Microsoft, Google, Facebook. That's why the technology in the sector XLK and Nasdaq were up today, but also some financials, JP Morgan, Berkshire Hathaway, and Citigroup. You can look at the complete list. There's Adobe, Nike, and other candidates. General Electric, there is the strongest trending stock in the S&P 100, Morgan Stanley, Caterpillar, Goldman Sachs, and others. We'll keep you informed of these stocks, other opportunities, and how we're managing short-term trades, because I think that's where the money is, short-term, intraday scalps mainly, and preparing for a retracement in this non-stop bull market. As always, guard your risk. Think about your risk first, and that is in this overextended market, we may see at any point a snapback, so be prepared. As always, be careful and safe. This is Corey Rosenblum with your Theo Nightly video for January 2nd, 2020.